as a trader or investor, you will be using this bullish ice cream bar very frequently. And this is also one of the most powerful bullish candlestick that you could use in your journey, in your trading journey or investment journey. So now, of course, there are more bullish candlesticks that we can find in the chart, but today we are going to focus in this candlestick right here. So in this bullish candlestick ice cream, very often we will actually look at the pattern, how it forms is the body of the candle is around 50% of the entire length, and also right over here is about 50%, and also the lower shadow is also around 50%. So of course there's some tolerance that we could take. Sometimes the body can be 60% and the lower wick can be 40%. It's still acceptable, all right? So within the range right here. And of course, why we call it a bullish ice cream bar is because it looks like an ice cream. And also sometimes you might find that there's this upper wick right here. It doesn't really matter. So there's a small bearish sentiment up there, but majority of the time is more bullish. So how we see it as more bullish? So we'll dig deeper into the charts to have a look on how it is formed. Alright, so now let's look at the charts right here, and where can we find these candles? And of course we can find these candles any place in the chart. And here this is one, and this is a big one. Alright, so okay, and then this is also considered a bullish ice cream bar, although it has some upper wick up here. But generally, the entire bar is bullish. Okay, this is a smaller one, but it's still considered a bullish ice cream bar. And this is the one that comes with slightly small wick, upper wick there. Alright, so okay, there we have identified some of the candles in the chart. It looks pretty common. And okay, this is how it is formed. Now price is open at this area. Imagine if the day starts the session. So immediately it gets rejected by the bears, or people are taking profit. Taking profit so that the price goes down. And when price goes down to a low, couldn't go down anymore, and there's a lot of bulls buying here. And the bulls manages to take control and bring the price all the way to the upwards, and it closes. The high and the close will be very, very close. All right, will be very near to one another. So telling us there's no bear in the present. All right, so that means the bulls are in control for this candle. So right here, if you look at the one-day session, and this is like many candles combined in one. So for this bullish ice cream bar, I would most of the time use either daily time frame or weekly time frame to be more effective. So now let's start here. So the day opens at 9:30, and this is where we see the candle starts forming one line. And as the price moves upwards, it forms a green bar, a green body. And of course, this is where you have a lot of bears waiting. And it tries to reject the price from going higher, and this is where we see the price goes down. All right, when the price goes down to a low, then what we can see is a upper shadow form, and there's a bearish candle body right here at this moment of time. Of course, it's still the beginning of the day. And this is where we can see there's a huge rejection here, bringing the price all the way to the upwards. So this means there's a lot of bulls are waiting here, and this is just very early in the morning, just 2 hours, and then the bulls, they start to come into the session, and they are trying to bring the price up, right, all the way. And at this part here, you can see there's some profit taking, because the angle of the price is slowly tapering off, and then almost at the end of the hour, then before the closing bell, then the bull starts to come in and bring the price all the way to the upwards. There's no presence of bear. If there's presence of bear, then it will start to reject the price going downwards. But the bears was not present. So the entire sentiment was generally or entirely bullish in this case. Alright, so the close and the high is actually at the same price for this case. So if you look at the entire chart right here, this is Microsoft for instance, and if you find these kind of bars, they are normally situated at the low part of the chart, and they are actually at a very significant support level. So this is a support level, as you actually attended some of the videos earlier. So this is the like a demand zone. So whenever price starts to wave up and then it gets rejected a little bit, and this is where it bounces up and it comes back and retests this zone right here before it starts to rally higher. So they are found in important levels, right? Important price levels, support levels. Okay, let's look at another example right here, and this is also where we can see the bullish pin bar is right here, and this comes immediately almost after one. This is very important. No, this is a very important level. There's a demand zone right here because price has actually respected that level, and as there was a huge panic selling here, then there was quite a lot of buyers waiting around this area. So after that, the price rallied strongly upwards. Right, this is in Facebook. Right, so here you go, some of the examples. And thank you for your time. Happy trading and investing. Striker X here, signing out.